What's going on, everyone? My name is Tyler Coates, also known as Sawcruteez, and I am the co-host of the Honest Analysts. This week it is just two of us. I will be joined by the co-host Fibonacci, who is going to be having some really interesting charts to take a look at on a number of time frames. We've had a lot of movement in the markets recently, which is a really good time to zoom out a little bit. Everybody knows the saying, when in doubt zoom out, but how many of you actually do it when you're in that liminal space and feeling uncomfortable and just out of your comfort zone with not really based on where the price has been moving and maybe how fast it's been moving? Is that a time where you instinctively think, oh, let's maybe zoom out and take a look at, if I'm usually looking at the 4-hour, maybe the daily, definitely the weekly, maybe even a longer time frame like the monthly. And I think Fibo's got something along all of those lines for us today. So that is going to be very exciting for me to take a look at, because that is one of the number one things that I like to do when the markets get volatile, is to just keep it simple and to zoom out and to draw horizontals with weekly closes. That's one of my most trusted methods when I am experiencing that liminal space myself, whether it be on the right side or the wrong side. Even if you're on the right side of the movement, you're still probably feeling uncomfortable. Should you take profit? Should you take all profit? Should you have entered more before the market moved in your favor and maybe be adding now? There are a number of things that can put you into the liminal space, and you have to have some tools that you trust more than anything else, especially including myself, and even including Mr. Fibonacci. So today I'll be very excited to take a look at some of those things myself, and with that being said, I will pass the floor on over to Fibo, because I will want him to get started out, because I know that I'll have plenty of questions to ask him. Unfortunately, I don't think Joe is going to be able to join us today. He might surprise us and drop in, but it didn't sound like he was going to be able to make it. So that will be very unfortunate, because this will be a very good time to get his input on the order book. But that being said, potentially it'll give me a little bit more time to ask Fibo some questions. So how are you doing over there, Fibo?
I'm doing well. Keeping busy. As we were talking before the show started, I trade energy for a living for clients, and natural gas is absolutely going ballistic the last 2-3 days. So it's been keeping me kind of busy. So I've been doing that and updating my Bitcoin charts. So no, everything's going pretty well.
That's what I like to hear. And before asking you to get into some charts, I'm going to take a quick moment to share I guess whatever you want to call it, a sponsor, an affiliate link that is something that I think people will be interested in. It's something I've been using myself. It is something that is free, and it's something that can help you stack some sats. So who could have anything bad to say about that? This is Honeyminer. Many of you may be familiar. I've heard of it for a while and never really got around to trying it out until maybe a month ago or so, and am really happy about what I've been seeing. Like I said, it's free. I go to honeyminer.com. There's an affiliate link in the description, and not sure what you get for using it, but you definitely support the show, and I appreciate that. But what you will get, with the affiliate link or not, is free Satoshis for using your computer to mine generally what is going to be not Bitcoin, but is automatically converted into Bitcoin. So Honeyminer is going to test your system, is going to run like a quick diagnostic and figure out what is the most profitable coin for your, just it's a desktop or a laptop, just a basic computer. It'll figure out what's the most profitable coin to mine, and then it will just automatically set it up, and anytime you get something, it automatically converts it to sats. So ideally, I would really like to be supporting the Bitcoin network, but I am definitely in the sense that I am going to be selling any altcoin that I can mine to hold Bitcoin. And the amounts here may not seem like much, but I haven't noticed any effect on my performance of my computer. I've got it on a couple of my computers. And it is something that what I think of is that 539 sats in 10, 15, 20, 30 years, it might be, $50, $500. And this is every day that, well, not every day, you see how it fluctuates, but this is something that I am definitely supporting and using myself. And as you can see, it just shows back a couple days, but over the last month or so, it's been steadily grinding away, stacking up some Satoshis and putting them into my balance, and I don't have to do anything. It took me 2 minutes to load. I clicked a couple buttons. It couldn't have been any easier. So big proponent of Honeyminer and would suggest to just give it a peek. And with that being said, I am so I'm not sure when that cut out.
I did not see that.
I think I figured out what the problem is. That should hop back on. Okay, sorry about that. Not sure when that stream cut out. I'm just seeing a question. What's the catch from Bebop in the live chat? I'm sure he's referring to Honeyminer. The only real catch is if your computer's performance is affected by running it. So if you have, if you don't have the best processing power, or if you're always using all of it, then adding something like this could really be way, if you're making a few pennies a day basically in Satoshis, then it affecting your computer's performance probably isn't going to be worth it. But if you got a spare computer laying around doing nothing, it's definitely worth it. And if you've got a little bit of spare processing power, I think that it shouldn't affect your computer's performance. And if that's the case, there really is no catch as far as I can tell. You have to do your own research. I have done mine. I'm running it on my computer, and if there is some sort of hidden agenda going on, I'm not aware of it, and I'm just as likely to be a victim as anybody else. So do your own research, and it's something that I would strongly recommend people looking into, and perhaps Fibo will try it out for himself next week and let us know what he thinks. And with all that being said, we don't want to take up too much of this precious time with that kind of chitter chatter. So Fibo, it looks like right now I'm still on screen share. I can send that back to you. And
all right. Yeah, if I use Honeyminer, it's going to be for stacking sats, so I can go to the poker table and play with a little bit of house money instead of get some free sats to try to make some more sats. How's that?
Now we're talking.
Let's see.
I'm more on that 20-year game plan. I've got my eyes wide at what those sats could be worth then.
Yeah, exactly. Well, let's. I'm gonna jump into charts here. Let me pull up my screen. Hopefully it works here. All right. So hopefully you can see some screen here. I'm going to see if it shows up on the. Okay, I just want to kind of see what I'm looking at here on the screen. All right. I got a few different time frames I wanted to go over because I've got a lot of questions this week. So I have a 4-hour, a daily, a weekly, and then a monthly. But first off, this is one of the charts I shared with my Patreon group earlier this week, and this is the 4-hour. And because there was a lot of questions of, as we started to rally up around in this area right in here, when we jumped up from about 11,000 all the way up to almost 11.8 or so. A lot of people were asking, all right, now that we're up above 11.5, and if I haven't bought yet, is it time to buy? And I said, well, looking at this fib level, and then also looking down at the indicators themselves, it looks like this 61.8% level at 11.5 on the 4 hour broke, and then the third candle in, and it looked like it was getting ready to settle, well above. So I was telling people, if you want to buy, 11.5 drop into the market would be a good spot to get, and it went right down to that 61.8% level and bounced. So a lot of the guys got filled, which is good, and working its way up. For the ones that didn't buy it, 11.5 was the spot to get some more. It worked out pretty well.
And
because
I'm already going to have to interrupt you very quickly to make sure everybody knows there is a link to Fibo's Patreon group down in the description below, something that I don't recommend things lightly, and you can do your diligence there by going and looking at his Tradingview and getting an idea of what he is giving out for free, and then considering, if it may be worth it to give his group a test, because from what I have seen and from what I've heard, it is absolutely something that I would recommend. And that being said, I want to take you back just a second, and
Yep.
if you're going to get there anyways, I apologize, but you mentioned how if you look down at these indicators at the ADX and the RSI, it looked like that level was going to break the 61.8. Can you just dive into that a little bit?
Breaking on the upside.
Yeah, right there. You pointed to those indicators and said you were seeing some good things that made you think that was going to break. What were you seeing in those?
Yeah. It gets a little bit confusing in here, but if you look at the RSI down here, that's one of the main things I'm looking at. And what I do is I break these into different zones. And if you followed me for a while, you can see where I put in bull zones and bear zones. I don't have the red in here. Let's put another, because they kind of overlap sometimes. And this is kind of the, if you make this into, like, say, the red zone or the bearish zone. Oh, that was just the outline. Hold on. Try to put it on here so you can see what I'm talking about. The when you go back to this point, this whole area right in here on the price chart, we had a high here at 94.75, and it worked its way down to 9,000 or so, and then it popped back up. The 61.8% level was at 92.95. It busted right at this point, and then came back and retested. And this right here was an area that I call a threshold, and this was the start of the break to the upside, and that's why the 100% is right at this point where it starts. And one of the reasons for that is as this is in the bearish area down in here, if you look down at the RSI, you were in this red zone down here, and it was at this point right in here as it popped up, and then it came back and held the area of break from before right at this point. And then that's when it held the 61.8% on a retest, and then it started to take off to the top. And the reason I'm saying that is I just wanted to show you the difference between the two zones, and they kind of overlap each other. So now once this goes in here, the green zone that's highlighted in here, and I'll take the red zone away here a minute, so you can see the green zone that we're in at the moment. But there's also the overlap that you can kind of use as a tool. So as it's trading, even though it dropped down into the red zone, it didn't break out of the green zone to where the bulls still maintain control. So as this came down here all the way down to 10.5 and then popped back up, it held its support and stayed inside the green zone here. But at the time it was moving up here, and it broke the 61.8% level on this fib from the high of 12.1 to the low of 10.5 here. As that candle pushed through here, at the same time the RSI is pushing back up through, it's kind of a depth kind of thing. So if you look from the green zone, it's back above where the red zone is, but the red zone is really not in effect at the moment, but it is something to use as a tool that says that it's really staying strong and finding more buying interest in the bull zone. So when this kicks up like this, you're getting that buying interest, and the candles move up, and of course the RSI is going to move up because it's a derivative of price. but it's moving up nice into that upper part of the bull zone. So when that happened, that right there became really good support after it closed, 12 hours later. It had that third period that I like to look at, to where once it closed above that third time, then the 61.8% level becomes support in the near term on the 4-hour. So anytime it comes down here to test, that's where you should find your buying interest based on what's going on. Now, the only downfall right now is that the ADX is not really super strong at the moment. It's kind of dropping, but the bulls are trying. So the nice thing is the trends to the upside, and the bulls are the ones that contain the zone right now. So the movement is to the upside. One of the reasons that we're not flying through 12K and onto 13K and 14K is because the momentum's not there yet. But in due time, it did cross, but the momentum's a little light. So that's the only thing that's kind of you would like to see a little bit more here, but it's enough to where there's not a lot of bearish momentum either. So as this thing pushes up through these levels, they become a lot more support. And that's when I was saying this is a nice support hold. If it dips down here, go ahead and grab some. A lot of the guys already bought, because if you listened to the show last week, I thought we were going to go about to 12K and back down to 10.9, and that's exactly what happened. So we sold at 12, not everything, but we sold a little bit at 12, and then I bought everything back at 10.9, and now I bought again when it dipped back down to 11. When it broke this red 38.2% level, when it came back up and it didn't break. When this candle came down and popped back up, as you can see, it kept testing. This 38.2 is the level to watch for continuation of trend for the long term from when this threshold started. So that's what I mean when I was saying when the indicators help me validate the strength of that fib line. That's where I get that from. So hopefully I'm not talking too much on one thing, but
no, that's perfect.
It's kind of hard to explain, so I'm trying to get it to where it makes sense.
That was an excellent explanation, and just what I was hoping to hear. And just to sum up very quickly, just as far as I understand, at least first to start with my impression is that I've never seen somebody use the RSI as effectively as Fibo, and it's a very unique approach that he uses. The common thing, what 99% or more of people, when they talk about a bull or a bear zone in the RSI, they're talking about the level of 50, and if you're above 50, it's bull zone. If you're below 50, bear zone, and that's the textbook way that you'll learn the RSI if you read a couple pages of how it's used. And as Fibo's going through those zones, that's not just 50 that's marked off. He's identifying critical levels of support and resistance in the RSI that correlate to critical Fibonacci levels, and that helps him to identify when a Fibonacci level may hold or may give, and then also uses the ADX in there as well. So thank you for going over that, because I think that is something I've learned a lot from you about, and I'll continue to have some questions, I'm sure.
Yep, and now what I'm looking for is two different things on the 4-hour. If you want to keep continuing to watch the 4-hour, is this 11.5 is still going to be a spot where I would buy if it came down to this level, as long as this RSI is not breaking this lower level here. I would actually be buying more there if I wanted to, but I've already bought what I need, so I'm not going to buy buying more. But 11.5 is a level to watch. But what I'm really watching is this 38.2 that held as support right here, and the intersection of this trend line from the point of when we had the threshold right here. This is going to be my support guide. So the intersection right here is about 11,000. So if this 61.8% breaks and it works its way down over into this area, the 11K level is a pretty good support to watch here on the 4-hour. So, depending on your book and how much risk you have and all of that, if you're at 11.5, the 11,000 is going to be the spot to really watch here. Because if this trend line in the 32 or the 38.2% breaks, then that's when we drop back down to that 10.3 that when we kind of talked about last week. as that next key level to really watch if it does start to break down. But given that, if we jump over to the daily, one of the things that I like about on the daily here is this threshold that we had on the RSI right at this point where we're in the bull zone. And as you can see right in here, you can see how the bear zone is here, and I could actually pull this over to overlap it. But we're in the bear zone here, and then we popped up into the bull zone, and then we're still in the bull zone right here. And the threshold right now is telling us that we had a high of 12,134, and the 38.2 is that 10.9 area, or right around 11K, and that's where I bought more. So that's why people were asking if they didn't get it at 11, can I still get some more if it comes back? And I said 11.5 was the spot to kind of look at that point in time. But 11K is that 38.2 on the daily that we're watching, which corresponds to the 4 hour on the intersection of this trend line and the 38.2. So that both of those kind of work. So if you're looking at the 4 hour, watch this as your support guide going forward. But what I'm looking at here on the daily is there's a couple of things, and hopefully we can see this. Over here, there's a trend line right here, and this was a break of one of the thresholds that if you take this distance rate of change, I just use it as a guide. But if you take the rate of change from the lowest point up to the trend line, sort of like the measurement you would use like on a head and shoulders type thing or something like that, and then you take that same rate of change here, it gives us a point of 13.8 from this point. And ever since this threshold, it went up here, held the 61.8%, and kept holding, and then it consolidated in here, and then we broke out again. So now we're above this 61.8% level of 10,000 even right at this point. And that's right where we've had 3 days above that 61.8% level. We're in the bull zone. We got a lot of momentum. So there's going to be a lot of buying interest in here unless everything starts to switch to where once you get past the 61.8% level from back here and making a new high, the psychology is if you were a seller in here along all of these lines, sell here, and finally got busted, and you want to really do it for long term, you're a little nervous at the moment to really kind of go in on a broad market short. Now, of course, you can trade in and out and all that, and unfortunately, Joe's not here to tell us that part. But if you're looking at it from a broad market perspective, the psychology is that we should work from this break point of the 61.8% to a full retracement of the previous high, which was back here at 13.8 right here. So when you get into this area, and the reason I like this whole spot right here is once it broke this area right here, you're in an area of very little resistance. I mean, from this point of breaking 10K all the way up to 13.8, there's not a lot of resistance to be had until the previous high. Now, of course, there's going to be noise, and there's going to be areas like 12K is kind of a psychological number, so you're going to see some selling interest there, those kind of things. But if things are coming up, and as the price comes down, and things are holding internally, and they're not showing any divergences or anything that's showing any bearishness to the market, I look to those fib levels as buying interest levels to kind of add to my longs if I want to, or just continue the trend from my original buy on my break of the threshold. Because I always buy the threshold, and then I'll always add if everything looks good and the 38.2% level stays strong as price makes new highs. So every time it makes a new high, we'll readjust that 38.2 and see where it's at. But right now the 11K is where that level's at the moment. So that's kind of where my risk is for the ones that I bought at 11.5 and at 11. So I think my average from when we started back here, I think I'm right around 10.3 or 4, somewhere right around there. So even if it comes all the way down to that 10.3 level that we were talking about, I'm still kind of at the break-even point. So I'm willing to take that risk to let this thing run to get to at least that 13.8 and then go from there. So that's kind of what I'm looking at on the daily. Anything you want to add to that, Tyler, or do you want me to go on to the weekly?
Just a quick comment there that
Yep.
something I pay very close attention to is the daily ADX, specifically when markets really start moving. Can be a tremendously powerful tool for exhaustion. What I will do is generally draw a horizontal up by recent peaks. Generally, we'll look for it to be above 70, preferably above 80, and that is going to be where I'm viewing it as exhausted. And anytime it's between 30 and 60, I'm viewing it as a very strong trend. And that's when many oscillators and other technical indicators will start showing very overbought conditions. And when the ADX is between 35 and 50, I am very confident that it is a market that is ready to push forward instead of being exhausted. And I will often share that analysis live. And a tweet that I sent out a few days ago when the TD sequential was on a 9 was the daily TD sequential was on a red 9 after a big move, and a lot of people are looking at that as a sign of exhaustion. And I said I look for a 0 to 4 candle correction when we get a TD 9 when the ADX is between 35 and 60. So that is what ended up happening, and that is something that I will pay very close attention to, is the ADX in combination with the TD sequential. And when the TD sequential is on a 9 and the ADX is getting over 60, now we're really talking about a point of exhaustion. But as it's standing right now, it is in a point that is indicating to me that it is a very healthy and strong trend with room to go. So that being said, I'll let you pull up the next chart while I run up and get myself a drink.
Yep, no problem. Yeah, one of the things when it comes to the ADX is it's kind of the nuts and bolts of my model behind the scenes, because I'll be taking, depending on what time frame I'm looking at week over week or day over day rates of change on the ADX itself, and also the directional indexes. And I actually have formulas that work. There's a little bit behind the scenes more than just what I show on the ADX here. But I also use it for what you're talking about, Tyler, is some of those areas of exhaustion behind the scenes. So I'm not going to go into all of that tonight because I'm not going to give my model away, for one. but the ADX is pretty important behind the scenes. I do like to annotate a lot more on the RSI so you can get a feel for what I'm talking about. But I use the ADX behind the scenes to give me a lot of validation. And a lot of that has to do with that overexhaustion or not, of course. So I like the way you do it. I followed you for a while, so I like to look at these areas of exhaustion to help, validate some of the other stuff I'm looking at. So, beautiful. All right, on to what? Oh, he's going to get something to drink. Going on to the weekly. Actually, I just put this out today on my Patreon, but I told him I was going to show this on the show tonight. So here we go. One of the things that I'm looking at here is this level right here that just broke above. I'd say I put a dotted line here right around 11.5, and this is a weekly chart. So I'd love to see a close above this 11.5 area, because when you look back at history, these levels right in here, nothing has closed above this level since this point right in here, which was all the way back at the beginning of 2018. It did wick up above it, but it hasn't never closed above it. So it'll be very interesting if we could get this latest candle right here to close above this dotted line, which is right around 11.5 or so, roughed in. But what I'm looking at is a couple other things. Way back here at this point on the weekly is where one of my inflection points were, where one of the thresholds was busted. So when you look down at the RSI here, we went from the bullish zone into the bearish zone, and we've been in the bearish zone for a while, and then it busted up into the bullish zone right in here, and then we went back into the bearish zone. So right at this point right here, we got the 61.8% level that broke at this level, which is right around 11.8. So that's going to be a very interesting level to be considering watching here in the next couple of weeks. I'd like to see it just close above above this level for one, because I think that would be very interesting and probably a very bullish signal just in itself if it closes this week above 11.5. But what I want to do is I want to watch this 11.8, 61.8% level. And if we get above it, and if we get above it 3 weeks in a row, and we close above 11.8 for 3 weeks, one of the things I'm looking at down here in the RSI is this is the first time we've cranked out of the bearish zone this week with this latest move to the upside, and we're starting to get above levels that we haven't seen for a while. So that to me is a very interesting look. If this does close into this area, we get into an area of little to no resistance, because you had a little bit of wicks here and there, but we haven't been above this level for a long time. And the previous high right here at 13.8 is the level that I feel that we can move to. And if that happens, this 11.5 becomes really good support, and I can see it coming up to 13.8, going back down to 11.5. And if we get that 3 weeks in a row over the next 3 weeks, if it stays above it, and this stays, and the RSI stays back up in this bullish zone, that's where the target for 17.2 comes into play, because I could see it going to 13.8, 11.5, and then up to 17.2, based on this break right here on this point, because this is this is the third week in a row right here above this point to where it's breaking in here. So this right here is going to be signified as a new threshold for me on a long-term basis. So what I'll end up doing is I'll be checking this as a threshold point, like I have on these others. And right now, if you start from the threshold point up to the high right now, the 10.4-ish area is where the 61.8% level is. So if this does end up dropping all the way back down, 10.4 on this weekly becomes the level to watch. But for now, that doesn't exist because this week hasn't closed yet, because we could still drop down and close this week back underneath. I doubt it, but it could happen. But right now, if this on Sunday, if this ends up being above this level, or even it's going to be a threshold unless this thing drops all the way back down to 9,400. So it's going to be a threshold point. So that's going to be a key for me. That's why I really like this move to 13.8 back down to support, and then all the way up to 17.3. And the interesting thing about this 17.3 is if you go back to the first candle on my breakdown this way, the 100% level is right around 17.1, which is really, really close to the point of break, or the rate of change of this distance from the break point to here. So all of that kind of working together is kind of interesting. But the main things I'm looking at are a new threshold and a break into the bullish zone, and see if this thing holds to get us to that 13.8 that I've been kind of thinking we were going to get toward, looking at the daily and some of the other time frames. So there's the weekly. We're moving on to different time frames here. So anything here, Tyler?
Yeah, quick follow up there. One thing that jumped out at me is very interesting was how you mentioned that was the first time that the RSI popped into the bull zone, and it also just happened to be right when we created the first higher high on the weekly. So I was just kind of curious, when was the last time that popped into the bull zone, and was there a similar situation happening there? Kind of looks like it.
Right at this point?
Yeah. So you created that higher high.
I don't have the trend line drawn in here, but if you drew this trend line from right here, that this 3 days past this trend line was the last time it did it, and it broke this way, and then it made a bull run at this point, because it went into the bullish zone right here, and then you had the trend line break from this trend line here, and then you could take I just use this as a quick measurement as a possible first target, but if you take this and move it over to here, this level right here was the target. as you can see, it kind of hit this target right here, hit some selling interest, maybe took a little bit of profit. But like any other time, I take my fibs from the threshold point and watch. And if you go to this point right there, the 38.2 held right here. So that to me is continuation of trend. The RSI wasn't dipping down, so that was telling me on this dip to the downside right here, it could be a possible good buy. I don't think I bought there, but it was at least telling me that it was going to continue trend. And then I move it up to the next one, up to this point. You get to the 38.2, and then it breaks, and then you get to the 61.8% level, and then it eventually breaks, and then you get the full retracement down to here, all the way down to this point, and then it just changes. I mean, I'm going through everything, but the last time it happened was at this threshold right here, off of this trend line break, at this point.
Awesome. And one thing I just thought of that I really like to pay attention to is the weekly ADX, and that's something that I just haven't looked at recently. Could you just kind of scroll down a little bit and show me what that?
Yeah, I don't have it on this chart, but I can pull it up.
I noticed that the weekly DI crossovers can be a great signal of trend. They come in at a really good time, and that can even be independent of where the ADX is itself.
Yeah, let me put some prettier colors on this one. For some reason, I don't know why it pulled up this way. Usually pulls up with the colors I like.
So yeah,
the crossover was right at this point.
And now we see the ADX about when that crossover did come at a very good point, and now we see the ADX is about ready to kind of confirm it. If it crosses 20, then the weekly would all of a sudden be in a very strong position.
Yeah, I always put these lines in so people can see. As this broke up here, the ADX is starting to loop up. It's actually getting to a point almost to the 20. So with that moving, if this closes above this level up here on the price, and at the end of this week, most likely this ADX is going to increase because that's going to bring on more buying interest. So I think what it's going to do is it's going to bring that ADX will probably kick up into the 20 to 30 zone for sure, at least inch into it, and then start to get because the last time the ADX inched up into the 23, 24 when it was bearish, you can see the nice little long candle to the downside. So if this thing starts kicking up right at a time where everything's starting to break to the upside, either A, it's going to hit some stops for people that are trying to sell it, or there's going to be a lot more buying interest because it's going to start breaking levels to make it look like 13/8's the next level, and people want to probably get in before it gets there, and it could probably bring some more of that interest in. So we'll have to see how that reacts.
Beautiful. And one more chart that I was excited to take a look at very quickly, and I do apologize to the audience for the screen resolution, not being able to see the whole chart. Thought that was going to be fixed this week. Tried to get a whole new setup in place and ran into even more issues with that. So we'll continue to work on that, and this won't be a permanent situation. And do appreciate your patience as Fibo is so kind to scroll through his chart to point out what he is enlightening us towards. And this is a chart you shared with me a while ago, and it's a monthly chart, so it's one of those things that you really have to, follow it along for a very long time before anything really happens. So now that I've been kind of paying attention to this for a year, it's been pretty darn intriguing to see the time. Would you say those are time fib zones, or they look like equal kind of time bubbles?
Yeah, no, actually, this timing is actually just equal. There's some other prior analysis that makes this a very pertinent point, mainly on the daily and the weekly. So this ended up being a low right here on a break, because it was a break of a major level and then it was a retest.
And just to clarify for those watching it, they're 3-month bubbles. So are they starting the beginning of the year, like December 1?
No, this one was in September,
okay,
and then it goes to December of 18, and then the next one goes to February or March of 20. Oh. But the timing is exactly the same.
Are they 9-month bubbles then? The timing.
I can't remember exactly what.
If it starts at September and goes until maybe they're 3 months. I think they're 3 months.
Let's see, we're at, this was right at September.
Yeah.
So if it goes to December, you got 12.
September, October, November, December. So they're quarterly bubbles. No, the 4-month bubbles. All of September.
No, this is a monthly. So it goes from 17 of, this is 2017 in September.
Oh, yes, of course.
To 2018 of December. So this is 15 months.
15 months. Okay. Okay.
Yeah.
So it's
so if you go from a low here to this,
okay.
The next
Perfect.
15, and this was a low right here.
Yep.
Right at this point, and then if you go another 15 months, there was a low that happened right on this point in March of
and
20.
you were showing us this like in real time. This isn't something that's we're just looking at in hindsight. We like I mentioned, as you kind of keep an eye on this in real time and come to one of these bubbles and see what happens. That's when some eyebrows start to get raised, at least from my end.
Yeah.
So that was something that was drawn up in real time on that big capitulation crash was the timing of that, according to this chart.
Yeah, and I mean, there's a lot jumbled on this chart, but one of the things I looked at was this low, and you take this trend line. Basically, I drew it to where it broke the 61.8% level right here. And once this area broke, which was also an area down here on the RSI, you know, this is kind of the level to watch up or down. So when it broke the 61.8% level here, you had to break into the bearish zone, and it made a full retracement back to this point right here, and made the low. And then again, it worked its way, and then it made a trend, and it worked its way up here. And then it broke again at this point, and it went back and almost made a full retracement, not quite, but it still made a low at that same point in the same point in time. So to me, this one right here from the low had 3 months to make a high, and then it worked its all the way back down to a full retracement. Then it had 5 months and made a high and came back almost to a full retracement. Now once this happened, you had a couple of wicks right here, and then this wick, and you can draw this trend line all the way out. And now that we're on this low, we're what, 1, 2, 3, 4, we're 5 months in, and all of a sudden the last 2 months is already above this line, which right now the trend line itself was around 9,100 or so in July, and now we're in August, and we're already at 11.5 or so. Now, if this stays above this trend line for another whole month and it doesn't break down back below the trend line, which is going to be pretty disastrous, I think, for that to happen. In theory, the break of this trend line, if you take the lowest distance from the line, and you take it to the upside, your long term, all of a sudden this threshold right here of 10,000, which basically is the area of this break of trend line is this 10K, that all of a sudden the 10K becomes really, really strong support, and 22K becomes your long-term target. So all of a sudden you're trading yourself into a whole different realm. So I don't know if the prices are going to go all the way back up to 22 and then come back down and make a low, or do we go up to like 13.8, maybe 17? Then we come back down and make a low on this timing, which would be June of 21, would be the next low to watch on this timing if it's going to happen. I'm not going to bet that it's going to happen exactly, but it's definitely something to keep an eye out to use as a possible validator of timing of possible low in the market. But
and I'm sorry,
but right now and if you want to get Fibonacci all crazy on it, which this means nothing, but I think it's kind of interesting. But the first time there was a 3 month to a high. This one had 5 months to a high. Why not have 8 months to a high for the next one? How about that?
Now we're really talking.
So, but we're already 6 in, so we need 2 more months to get to a high. So I don't know where that high will be. Most likely 13.8 or 17, like I'd looked at on the weekly chart. So I mean, in the next 2 months to see 17, I don't see that's out of the question. As long as 10K holds, I don't see any reason why 17 can't be a target in the next 2 months.
That's beautiful, and I hadn't seen that 3 month pop and 5 month, and 8 would make perfect sense. With that would leave 7 for a sharp dump back down, which is, yeah, got me thinking about a chart that I posted myself a little while back that, yeah, maybe take a quick peek at before. So yeah, that's some really cool stuff. Could you just, I think the bottom was kind of cut off that I couldn't quite see. Was it the 2021? Or yeah, what's the year of that next low? Yeah, so 2021, about halfway through.
Yeah. The next low on the timing is June of 21.
Beautiful. And that is lining up with, yeah, definitely some things that I'm seeing as well for a potential low that would be disguised. So yeah, that's very interesting. So yeah, I'm glad that I'm not on the hook for any sats today to give away. If we're over an hour, I would have been feeling confident about that with just the two of us, but I knew we had some important charts to talk about, and last week I just wanted to kind of prove to myself that I was capable. So yeah, I guess I've got some charts that I can go ahead and dive on into.
Let me stop sharing here.
Try to keep it as close to the hour as possible. It might be going over a little bit. So sharing my screen now. Here is a chart that I posted. I haven't posted much on TradingView. I was posting for a while, I was posting daily for almost a year, and then cut back to much less frequently, and then just kind of over the last 6 months or so, just kind of been posting the most macro stuff. I was actually thinking about it today and was thinking the next post that I have to make is on the next big dip, which I'm planning on being a really good buying opportunity. But this was a post that left me with plenty of egg on my face afterwards, because it was a very bold call that I was, feeling pretty good about after plenty of analysis. And it was just kind of in line with what Fibo was saying, something around 17K could happen in a couple months. I was thinking the same thing back here, beginning of 2020. When the market gets moving, it moves so much faster than anybody else is prepared for or can expect or can believe. Whereas if somebody wasn't really willing or ready to buy 10,000 last week, well, they're sure not going to be ready to buy 11,000 this week, and that's how you end up getting left behind. And that's where I try to kind of mentally prepare myself for the big moves that can happen. So I was looking for a buy the hype, sell the news, buy the dip of a pump to 17K by May of 20, and then a prolonged kind of ABC type of correction to come back and test this trend line, to retest horizontal support. I'm sure there'd be some fibs here if you were to draw them in. I was using my weekly closes that I mentioned at the top of the show. I will draw in those horizontals using these critical points on the weekly, and this is a chart that I still think is I really like this chart, and I think it's like a COVID curveball that kind of came in here and went out, kind of really screwed things up. If it wasn't for that, I'm inclined to think that we could be getting something like this that goes faster and harder than anybody thinks. And then the other thing is that it goes sideways or kind of sideways down for longer than anybody thinks, makes everybody lose interest, and then boom, pops right in 2021 is like I said, I'm seeing some critical time things there. So don't want to waste too much time with that. That is a chart that I think could have turned out to be real nice. As it turned out, made me look like a bit of an idiot in the real time, and that's how some of those things will go. So want to just quickly take a look at EMASAR on the 4-hour, and let's get a nice clean chart up. Okay, we're gonna need something like Bitstamp, and last week I mentioned the target of 11.7, which it was actually 11.730, which has been the target for EMASAR ever since we supported above this horizontal here at 81. and that was where that would become invalid. If you broke that down, then you would look for a marker below. As long as we were above that, the target has been this 1173. So this is an area that I've been keeping my eye on here for a while, and that's kind of what I've been holding out on to look to, really start to taking some profit. And that is based on those of you that have EMASAR. If you go to my website, Sawcruteez.com, and then go to trader mode, I explain exactly how the target markers work, very objectively, so you can understand in real time why this will be the marker. And then B, trying to get an update so we can get this extended. For now, just kind of have to come in and know the rules and then draw your horizontal there. So pay very close attention to how the price reacts around these horizontals. Was obviously paying very close attention to this and was able to confidently buy around here due to the reaction around this horizontal in confluence with the 200 moving average exponential and the beach. And now I will look at this one to see how are we performing around it. If we turn this area into resistance, then I am going to be looking for a return to the beach, and that is where I have my orders set. My target buy is, last week I mentioned that it was 98 to like 10.3.5, and that was kind of a projection of where I thought this would be when price would get there, and mentioned that if it got there too soon, like here on this sell-off, my orders were waiting right here, and I got none filled after getting a nice trim. I trimmed, I don't know, 20% of the position, something like that, and then we get a sharp move down, which is where I would be looking for my orders to get refilled in the beach. Didn't happen, and I was even generous with my orders here. I was up to 10.33 due to some smaller time frames. So I was 98 to 10.33 on that dip. Completely missed buying back what I'd sold here. When I sell here in a bull market and I take profit, my intention is to buy back lower and to maintain my exposure as long as the trend is intact. And if I sell and the price dips and I am unable to rebuy, well, that's basically means I probably would have done better if I just wouldn't have sold. And that is something that, if you're going to be actively speculating in these markets and actively buying and selling, you've got to be constantly thinking about what is your edge and where do things go wrong. And if you're consistently, selling too early and not being able to buy back, or maybe not selling at all, then these are the things you need to be aware of, and you need to be able to define what are your weaknesses and what are your strengths. These are things you have to understand. If you're going to be actively speculating in a market as volatile as Bitcoin and you don't have any clue what your advantage is, then the only thing that comes to mind is the old poker saying that if you can't recognize the fish at the table, then you are the fish. And let me tell you one thing, Joe Saz is somebody who has no idea who the fish is when he sits down to play poker. not about trading, just about poker. And that is something that hopefully doesn't watch back, because you don't want to tap the glass when you got a good fish at your game. So anyways, still looking for some potential resistance here from 11.7 to push us back down to the beach. And what I really like to see is a confluence of horizontal lining up with the beach, which is the buy zone right in here. So when we've got this established horizontal that is pretty clearly defined right here, and then we've got this beach coming in, that's what I really like to that's what kind of makes me lick my chops a little bit. So I will be viewing that as a better than normal beach entry. Not every time that price enters the beach is it the same likelihood of success or the same risk reward or anything like that. Every trade is different, and you need to know what are your perfected setups and what are your setups that maybe you should stay away from, and what are the ones that maybe you should bet smaller on. Having a clear understanding of what are your signals and then what are your best signals is that can be a way that you develop an edge. And if you can either stay away from all of the mediocre to bad signals, such as a TD sequential red 9 that occurs when the ADX is in a very powerful position, then if you can start to pick apart to decipher the mediocre or the bad signals and avoid those, then you're going to be in a perfect position to take full advantage of the really good signals. So that's something that I really think a lot about, and is really how EMASAR came together, was thinking about how some of the best setups that I know of. So the last really good setup that had additional confluence was back in here, where we had the horizontal that wasn't necessarily established from drawing it, but it was established from EMASAR, that just had this printed right here. So you had the horizontal with the beach right there, giving you a perfected entry, which of course perfected entries can go against you just like any other entry, but it's good to identify the entries that you want to be sure to take in a significant way. So now, as the prices continue to move up, the buy zone has continued to move up, and it's actually become reinforced. So 10.5 is going to be a big area of interest for me, 10.5.5, and then potentially something I'll look for is when you have this established horizontal, is maybe a peak below to stop people out who are using that as their stops, and then to just run into a huge amount of support here is also something else I like to see. And that is where I have glommed onto what Fibo's been teaching so quickly, is because what I've realized is that often these critical horizontals are Fibonacci levels, and they're identified before I would be able to do so otherwise. So let's just say that we have right here, we've got our, let's see, is it a trend line or is it a horizontal? So right there, we're going to have our trend line break. So we're going to start our fib right there. We break the trend line, we retest, and now
and that matches like my threshold area type deal.
Oh, perfect. Yeah, exactly. I mean, yeah, I'm glad to hear it. As I have,
I think so. I think that looks the same.
I'm glad to hear it, because that's as I've been learning these from you, I'm hoping to start to see them somewhat in a similar way. And what we can see is that right here, where my horizontal was that I was drawn, we have this 0.618 retracement, and that is going to again be right here in line with the beach. So that would be absolutely a perfected setup. One of the things that I like to see as much as anything else would be to see my beach cut right through the shallow 0.618 to 0.382. I kind of said that backwards.
And the beach right now is at 10.3, right?
It is 10.3 and a half down to 97.80.
Okay.
And if it keeps moving up, well, we should have that thing cutting right through that fib level, which that's what I look for myself, without trying to give away too much of exactly how I'm trading either. I am going to be paying very close attention anytime I see the beach crossing into this Fibonacci support, and again viewing that as a bit of a perfected setup. Okay. Anything else there before wetting my whistle and moving on to the next thing?
It look good. It looked good to me. Like if that beach keeps going up, the beach will end up being in a new realm between 10.3 and 11.7, right? Somewhere right around there.
Mm-hmm. Absolutely, yeah. It'll just keep moving on up, and it will eventually disappear to indicate exhaustion. If the trend has lasted just too long to where you've just missed out, then the beach will keep kind of moving up.
The beach erodes away.
That's right. And with all of the problems I've had, my mouse just died. So hopefully we've got a spare here that's gonna work. So yeah, that is, if not, I've got another option that I'm gonna have to go grab real quickly. All right, keep them entertained, Fibo. I just need 1 second.
Hey, before you go, take me off of. Oh, never mind. Or actually, take me off the screen share so I can show him something. Oh, he left. Sorry.
My mouse is dead. I can't really do.
Oh, you can't touchpad it off
right now. So,
well, I didn't know if you could touchpad it off or not.
Oh, that'd be cool. My new setup does have a touchpad, but not the old one. So
okay.
I remember. Yep, I gave myself an emergency setup here. Just in case. I'm sure glad that worked because it never seems to
All right, there
when
you go.
you want it. So yeah, anyways, we're just going to point out how this area will kind of keep moving up, but eventually it will disappear if the trend just kind of moves too long, where you just missed out to where it's like, look, this ain't an entry anymore. That's one of my favorite things about this indicator is the exhaustion, where the weather turns stormy, and then the beach disappears, and that is your indication of a exhausted trend. And it's been amazing how well that has worked right there at the top in 2019. Also caught the bottom of that sell-off in 2018 after also catching the top right here in 2017. Got a little bit extra, but real nice move there. So that area will continue to move up, and as the weather changes, it indicates that we're getting more and more into the meat of a trend that if you haven't entered by now, I really if you haven't entered and taken profit and are looking to re-enter at a better price, and the sky has gone from blue here, clear skies, to partly cloudy, this is where I want to enter, is clear skies or partly cloudy. This is where, if you have a trend that has lasted from clear skies to partly cloudy and you still haven't entered, and now all of a sudden you make a big move, and now all of a sudden it turns not only partly cloudy but cloudy, yeah, your beach is still there, but this is an unperfected setup. It just based on if I was completely missed out and the chart had moved away from me, and we're now getting close to stormy weather, being that the clouds are coming in. This is where it's like, okay, are you really, why didn't you buy before when we had all these signals? And why are you so interested now? And is that a situation where maybe you should be passing? So that's what the weather change is so important, and a longer answer than you asked for, but something that I thought was important to talk about. And one important thing to touch on is that 11.7 here, 11.73, that is our target marker. That is where I took some profit. And I did miss out on my orders here, but I was fortunate enough to go ahead and tack back on what I sold 11.7 here around 11.2. Very quickly. We had some good signs out of the fibs and out of the EMASAR. So here we reversed the 15-minute chart, and we just failed to push any lower. So right here, this is a bear trend, being that the beach is on top, so it's a sell signal, so it's a bear trend. But notice how the price never went lower. You just kept moving up and moving up, and the horizontal didn't act as resistance. So that's the key, is that if the horizontal doesn't act as resistance, you expect chop or you expect continuation to the upside. So here we're getting some pretty dang good signs that the that we've got some good support. As we have broken through the 0.382, if that holds, then we look for continuation. That doesn't hold, okay, let's see if it can turn into support. Here we've got the 382 turning into support after the marker, it's resistance here, but it's not that real clean, solid rejection of a solid line in the sand. And now we've got some good signs out of the fib, and the most important thing to me here was we just had higher lows. Higher low, higher low, higher low. When we get nothing but higher lows in a bear trend, that's when that bear trend is often a good opportunity to buy the dip, something we went into in depth in the webinar. So that was one thing I was paying close attention to there, and even though I did miss my orders, I was able to tack some back on. Something else I'm looking at is, okay, it looks like maybe the 382 has turned into support after it failed to resist. And then what do we see? We see the beach lining right up. So we've got confluence with the beach and the 0.382. Pretty good opportunity to go ahead and say, okay, I missed my orders, but seems like still a better, significantly better price than what I sold. Let's go ahead and dunk that back in, and that is what I did. And the thing to pay attention to now for me, there's two, is going to be this 4-hour marker. As the rules state, if we turn this into support, and something I haven't mentioned much, but I'll tell you here, is that my confirmation will be the 50 EMA crossing it. If the 50 EMA crosses this marker, that is my confirmation that, yeah, it held, and it's spent enough time up here, and it didn't reject it like you would, kind of like this supported it down here, for example. So that's what I'm going to be looking for. If this 50 crosses 11,730 on the 4-hour, that tells me it held as support, and therefore I have to go back to see any markers above the price for the target, and there are none, and therefore when there are no markers above the price, the target would actually be an all-time high retest. So this is EMASAR talking, not me. Don't kill the messenger. If we turn 11.7 into support, EMASAR is saying target is all-time high. And I'm not one that argues with EMASAR. I've learned my lesson, so take that for what you will. Other critical level for me is going to be this daily horizontal. Look at how beautiful, just absolutely perfectly on that last crash that, it wasn't a, just maybe 10%, but it happened very, very quickly, and it was a very, an environment where stops were getting liquidated and market was moving so fast, so quick that you could barely think. But look at the daily horizontal, aka the marker, just, I mean, down to the penny, perfect support, as we recently saw with the 4-hour. So that's the key that I look for is this thing really ready to continue, or is this just a head fake, or is this just more chop? If this is a trend, we should reverse and we should support the marker. And look how we have the 50 getting ready to cross. So that would be my confirmation that, yeah, we did support, and that's coming in hot. So those are going to be my critical levels that I'm paying attention to. If we give up this daily marker, then I'm no longer, then of course 4 hours isn't going to be targeting all-time high because we're below this. But as long as we support this, I'm inclined to think 11.73 is going to give, and if it does, EMASAR's target would be an all-time high. Okay, one thing I want to highlight quickly, and then we'll see what other things we have time for. But this is a kind of pattern that I've really never noticed much before about a year ago, and now I've kind of started to see it and some of these really volatile markets. And it's this this thing that first starts out as like a head and shoulders that breaks to the upside, and what I'm used to seeing is what I've seen before, what I'm going to try to pull up a fractal for, is where it gives a head fake to the upside before dumping back down and then taking off. So what I kind of look for here is this channel where it's like, okay, we've got a trend line there, and if we connect it to the top, the median should play an important role, and it does. So we kind of see how, you know, this trend line for sure, that's important. This median, yeah, that definitely looks important. And then if we just connect this, which isn't important yet, but I think it definitely could be. And the kind of pattern here is that you kind of run up and you get you stop out the shorts or using the local highs, and then you also get the breakout buyers to you know, market buy that higher high, and then it immediately comes back down to create a higher low before kind of taking off. And I mentioned that I hadn't really seen anything like this before about a year ago, and then once I did see it, it kind of made me pay attention because it was so just unique. So if we look at kind of right in here, let's see what happens first. You get big run up, and then a pullback consolidation, and then this little run up, which here, right here, my mind just tells me there's going to be an RSI div there. So let's just take a look and see if my mind is seeing things or not. And it looks like, I'm not sure if I was pointing to the right thing here, so or maybe I was misseeing it, but right here we kind of sharp spike. We push up a little bit higher, you know, you take out this high, and then you move up, you take out this high, and you know, just clear divergence here, and then you do it once more, where you take out this high, divergence on the RSI, dump, but and then just dump into a huge pile of support that just keeps creating higher lows. And then after the 1, 2, 3, 1, 2, 3, it comes up and breaks out of the top and then accelerates at a higher angle. So if I was to turn that into a fractal, I haven't tried this yet. Let's see if it works. Do something like that to make it nice and exciting, and see how that matches up. And to see how that matches up. Okay. Then we might have to potentially make it a little bit bigger. All right, so here we're gonna, and I haven't checked this before, but my mind was just kind of telling me to, and I was hoping that that was a little better. But here, I mean, that's spot on. A little kind of bull flag looking thing. Here we actually got a little bit more continuation than here. Here we just kind of struggled to, and maybe I don't even have it because this should be kind of, let's see, something like that. I think you guys should probably get the point where, okay, you got the run up and then the peak above. So let's just do 1, 1, and then 2 here, 2 here, and then here's what I'm drawing here, where you run up, you take out that high, and then you dump into this pile of support, 11.4 down to 10.8, and then you just kind of grind up, and then eventually take off in a really sharp manner. So that is really what I'm paying closest attention to right now, is seeing that as the kind of most likely outcome, where we just kind of get real choppy in here with some of these big dumps, but then what I just pay attention to is these higher lows and higher highs. And as they kind of act as traps, as long as the support keeps moving up and pushing and pushing and pushing and holding strong, that's when something's got to give. And if support ain't given, then it's probably going to be this upper resistance echelon. So a quick look at the weekly horizontals I've been talking about, and then we will probably be at a good time to call it a day. Okay. So we want to look for closes, and then draw our horizontals. So we notice how...
Actually, actually, that's that same horizontal that I was looking at, saying that that's the first time on the weekly that we've actually are back above that line here, whatever the price is today.
Yeah.
Pull it over. It's starting to go above that level right there.
Yeah. Sure enough.
And we haven't been above that line in a long time. I just thought that was an interesting horizontal for sure. And that's the horizontal that matched up with the 61.8% of the threshold way back when on there too. So that's why that horizontal that you just drew right there is, I think, pretty significant for sure.
I think it's the most significant other than 10K. Now that we've kind of gotten through 10K and we've gotten our higher high, outside of 10K, I was paying very, very close attention to this horizontal here as we had, you know, very critical area that we continually rejected. So now that we've gotten through that, this is it for me. And EMASAR agrees. So this is where if I can't really understand where EMASAR is coming from, I'm probably not going to, you know, take that as my target. But this is a spot where I just love what EMASAR is saying, that it's saying if we can break through this level, we should retest all-time highs, and that's exactly what I'm seeing here based on a weekly chart, not you know, that's the 4-hour EMASAR. So really like how that is showing its critical horizontal right in line here, and we can see how important this has been ever since that first, this would have been the phase 5 sell-off. If you would have just right then and there on that big move down drawn a line at that low, here you would have it at 11.314, basically exactly where the EMASAR horizontal is as well. And then you see how here tried to kind of hold on, clearly resisted here. That was what rejected. We failed to close one single weekly above that on that big move up, even though we blasted over 20% above intra-week. Never got one weekly close above. And now here we are back again. So that when I'm in the liminal space, the weekly horizontals is something that I will pay very, very close attention to, and that's what I've really, before my horizontals that I drew never really lined up with the fibs, and as I've learned them from you and where to start and end them, now I'm seeing how they're lining up. And this isn't the best example because I think anybody could draw this one for the most part, and maybe it's not the one I'm thinking of. Was it? No. I thought there was a 61.8 coming in right around there, but oh, yeah. So there again. So that's how most people would draw it. And the very, very large majority, especially anybody you would learn from, they say, oh yeah, you know, here's your fib. You drop from the high to the low, and clearly that was a really good spot to have here. But if you're thinking of, okay, here's, you know, phase 5, 6, 7, this is really where this move started, was on this one. And now we've got what is the critical 0.618 lining up perfectly with my horizontal. And also you have the 0.786, which I've got very faded on here. You can barely see, but it's right here. So by adjusting it to how I would draw it now that I've learned from Fibo, I don't give up this being here because of the fractal nature that is so cool, that here you have that or fib still as a horizontal, but the critical one where you're waiting for, say, 3 consecutive closes above or below holds perfectly and is right in line with the horizontal that I'm drawing. So that is a good example of why I've been liking those so much. So the one thing that I would just distinguish from just a little bit more conservative than what EMASAR is seeing, although based on what I've seen out of gold and how closely I think Bitcoin has been following it and trailing it, I am not too confident in this objection. But if it was just me in a vacuum and you were to say, hey Tyler, what's your target? My target would be based on a weekly horizontal, which is going to be this close, the highest close on that phase 5 right here for 16,183. That is premature. I would need to see us turn that 4-hour horizontal and into support, and I told you exactly what would need to happen for me to say, okay, yeah, that is now support. And if that does happen, then my target is going to be 16,155 with a in the front of my mind what EMASAR is going to be targeting at the all-time highs, and then of course going to draw in the bull flag pattern that we took a look at last week to see how that is looking. And what I pay very close attention to is pattern targets line up with critical horizontals. So as Fibo, I think, was kind of doing something similar, looking at this trend line break, drawing this line, and then using it to project, I am myself looking at this bull flag, drawing that, and then using it to project, coming in right around 15.6, and so that is the higher time frame targets that would be valid if we can support 11,730. And in the meantime, I do think that for me 13.9 is the target, where the target is set, and that is going to be a Fibonacci retracement target, just using the peak and the low here, and choosing that because that was a very emotional day, and as was that, and I think that's going to be some very good fibs to use. And as we can see, they have been important thresholds here, and as we have busted through this 0.618, that would make me look for a full retrace, which would be the high of this, which is 13,880 on Bitstamp. And in the meantime, would look for this to be my critical area of support. And as long as this holds on a throwback, I will continue to target that. And if we do break, we'll say, this down at any point, I'm not as adept with the multiple daily closes as Fibo, or even weekly closes in this point. I would just be looking for basically, if we fail to support this red candle that occurred before the breakout, that would tell me no longer valid. But as long as we are above here and don't spend, too much time in here, then I will be looking at my first target as 13.9 for my next potential area to trim, and the game plan, which generally almost never plays out as you would hope or want, would be to get a nice little move up to that horizontal area to get a little trim, and then to be waiting with my arms wide open to catch that little pullback there. And with that being said, I know we have gone over our hour time commitment, and hope that Fibo, your family's not waiting for you to eat dinner, because I know I'm starting to get hungry myself.
No, they are not. I don't know what they're doing, to be honest.
Well, very good. I did get you and Joe a present for joining the stream and being so generous with your time. And I guess I wasn't quite thinking about sharing it today on stream, but it seems like it'll be a good idea. So if you just want to take 30 seconds to say your goodbyes, I'm going to share you the gift that's coming your way.
All right.
Gifts, plural, plural.
Yeah, if anybody has any questions or comments, just follow up with me on Twitter. I'm at Fiboswanny, FIBOSWANNY, and I can help out there with anything. I know a couple of questions in the chat was for some charts. I am going to throw them out on Saw's Telegram group, so take a look at them take a look for them there.
Excellent. And yeah, I apologize to everybody who is asking good questions that we just clearly don't have the time to get to. We may just have to decide not to do questions from the audience. Maybe I'll just be the one that does the questions moving forward. But I do apologize for those of you who didn't get your questions answered, and awful generous.
Yeah, one of them was a DXY chart. I've already kind of worked one up. I'm going to throw it out in the Telegram group so people can see it. And then someone else brought up Link was going crazy, and I'll throw that chart out too. I actually had a target of 1020, and I think it's hit today or yesterday, so that worked out pretty well too. So I'm gonna throw that out there too. So look for it.
That's beautiful, and I guess I'll take just a second for a sidestep. As you mentioned that pair, I wanted to give you a shout out for another brilliant call that you made. Not only were you projecting that price, but the recent pullback that you identified the very local low of, if I am remembering correctly, and I'm going to pull up that chart here very quickly to where, and give my target as well. So right here, we would be looking at the daily if I am going to be pretending I'm Fibo and pulling back up what he showed. So here we had our breakout, pretty clearly identified emotional point, break through the all-time high. Draw your fib from the low to the high, and then what do you notice is that first, the shallow fib is a great buying point, and then the 382, and then the 618 down to here was a beautiful area to buy as well. And
I think that's on Link.
Yeah, that was what I was meaning to take a quick look at. Was that this was the chart I remember you sharing?
Oh, okay.
Am I remembering that
I've showed
correctly?
so many charts. I get confused sometimes.
I remember you highlighting this fib level right here as we were pulling back around the 650 level. So that was something I wanted to give you a shout out for.
That's what it was. Yeah, it was a 650 hold on the 61.8%, and that hold was a buy with a target of 1020, and it hit today or yesterday or one of the days.
Beautiful. So I'm going to share the target.
Not that it can't go higher. It's just that was the zone to watch for based on the fib movements. So that's cool.
Long a little bit this myself. I'm sharing my target. I'm ready to. I'm thinking we should pop through 10, and really scare anybody on the short side or make people FOMO in. So my target, I'm waiting to sell, is 1110, and will be very quick to get out if that doesn't work out. So just a little quick bonus for anybody out there interested in Link. My view is that this is a bull flag on the daily, and we can measure it with this pull here connected to right here. And if we do that, that will pull us in around 1140, which is going to be where I'm going to be looking to fully exit that position myself. And with that being said, Fibo, thank you so much for your time and generosity with your time and knowledge and expertise. This is information that, try to go to Yale or Harvard and pay for this type of education at the top university in the world. You ain't getting it because for the most part, those who can't do teach, and that is something that I am tremendously appreciative to somebody like Fibo, who is here giving us, I would say it's an Ivy League education, but I think that would be, almost downgrading what he is really offering us, as it is an education from somebody who has spent a career of trading through the thick and the thin of tremendously volatile markets. And I, for one, have been learning a lot each day, and am excited to just share a little token of my appreciation. As mentioned, I got a couple little gifts for you. And now that I'm pulling this out, it's not looking like the large that I was expecting. So hopefully it fits. If not, I'll just have to get another size. So let's see if you can see. Can you see?
Yeah, never underestimate an old man that plays disc golf. I love it.
Yeah, that's a fact. And you guys out there, don't forget it.
So at least everybody knows now that I've been doxxed as a geek disc golf player.
And
That's awesome.
Yeah, I'm happy to dox myself. I'm a big disc golfer. I've got a basket in my backyard. I would go show you guys right now if we had the time. But so as I was getting your other gift, I couldn't help but give myself one as well. So I got you my favorite driver, which serves me very well. And like I said, I had to get myself a fresh one. So a Champion Destroyer, 72 grams. It's an understable
Nice.
disc. So if you are you an Annie guy or not?
I can be. It just depends. I mean, I have to be sometimes.
But that's not your natural. Perfect. So that's this will be perfect for you. If that's not how you normally throw it, this will get a a real nice S curve. It's distance driver. This is how you huck it out there 350 like we were talking about with
all right.
With
no, thank you very much. That's awesome.
So yeah,
I like the colors too. Nice psychedelic.
Absolutely, and I cannot wait to play with you myself. We're gonna have a heck of a time out there once we finally get the chance to do a little disc. And I know I've got a little Bitcoin on myself. I'll tell you that much. Only because I like to gamble, not because I think I'm gonna.
Yeah, I hear you. I can see Bitcoin per hole. Or per one. I can see it happen.
All right. Well, enough fun for us this evening, everybody. Thank you all for tuning in and for sticking around all the way through the longer than expected stream. And despite it only being two of us, I think we got into some really cool concepts, some of the longer time frame stuff, and then really kind of looking at under the hood at some of the tools that we have grown so fond of using ourselves when we get into the liminal space that Bitcoin has such a tendency of putting us all into. So please go out there and follow Mr. Swanee on Twitter and on TradingView. Give his Patreon group a look. It's something that I think is well worth a look at the minimum. And if you are so inclined, smash that like button and hit the subscribe with the bell so that you are notified when we go live. Share this with any of your friends and family that you think would gain any value out of this, and I would appreciate that very much. And go on over and check out Honeyminer. There's a link in the description that will basically in 3 clicks turn your PC into a miner, and maybe a couple more clicks, but it's as simple as can be. You can start mining the most optimized coin for your computer and get it automatically converted into Bitcoin. It's free to download. If you use the affiliate link in the description, then that will support the channel, and we always appreciate that. Seeing a tip that was sent out earlier, and that is greatly appreciated as well. I'm not sure if he designated if that was for Fibo or myself. If not, I'm keeping it.
There you go.
All right. Well, thanks.
It's all yours.
Thanks again, Fibo, and
hey, you bet.
we will be looking forward to seeing how the next week turns out. We are both looking for higher prices and have given some precise numbers as well as some areas to look for buying and also to look for invalidation. And we do not want anybody to copy any of the setups that we provide. We are simply trying to do our best of being honest analysts and sharing not only what we think about the charts, but also where we're buying and where we're selling and where we're getting scared. So thank you again for tuning in, and let's go Bitcoin.
All right. Peace out.